Hey gang, it's Friday. This week went so fast. Just like every other week, but it's crazy how time literally flies and a lot has happened. But everybody's still freaking out. Everybody's getting tired of the summer slump. But you know what? I got some good news for you. So let's jump in. This video is called Halving Targets. So we're going to talk about Bitcoin halving targets. We're going to talk about whether or not we go down from here or up. And if we go up, when will we go up and how far will we go up and when is that going to happen? And we're also going to talk about JP Morgan and what they think about Bitcoin, which is like a bit of I thought it was like an April Fool's joke when I read the article on Bloomberg. And then we'll talk about the other JP in Jackson Hole briefly. I'll get on a little bit of a rant and we'll look at some shadow stats and some more data and a whole bunch more alpha. So let's go. Thank you all for being here. It's Friday and this is edutainment. And again, most importantly, people always ask me about why do you say amplify your intelligence? Because AI has come, it's here, and I do believe this is a very transformative time in our lives. The next 18 to 24 months will be critical. And my pledge to you is I will be here every day, bringing you content, bringing you data unwaveringly, okay? So if you want to help yourself navigate the next 18 months, which will yield a lot of opportunity, you should subscribe. So with that, feeling quite eloquent today, let's talk about the story. We're going to talk about Bitcoin halving mainly. What else? A little bit of macro data, a little bit of Tesla data. I'll do another Tesla segment tomorrow dedicated because I know some crypto people don't like Tesla. So we'll move on from there. All right, so let's begin with the last 3 years. Let's look at these beautiful 5 asset classes. And let's monitor relative performance of these 5 asset classes over the last 3 years. And the reason I chose the last 3 years is because you bolt on 3 years, you add 1, you get kind of a Bitcoin halving cycle. But it's also when everything really began to happen. Now, when you look at these, this is Ethereum, gold, Bitcoin, S&P 500, and NASDAQ. And over these last 3 years, the results have been quite bizarre. 330, let's call it 333% gains on Ethereum over the last 3 years. Mind-blowing. Gold down 1.86%, despite many believers thinking it'll be the best asset class of 2023. You know, if I go back 12 years, it's down like 45% because you lose a lot of debasement of the purchasing power, etc. But we're not going to talk about that. We will actually later. We look at Bitcoin up 130%. S&P 500 beat the NASDAQ. It's up 27%. And the NASDAQ's only up 17%. But remember, it's important to understand relative terms where things go. Part of this is why I do believe certain things like Ethereum could outperform Bitcoin. But Bitcoin could have a very special year. And it's a very special asset. Remember risk reward. Bitcoin, I think, is one of the best risk rewards out there. So switching gears to Pantera, big fan of the Pantera team and Dan Moorhead, etc. But they came out with a beautiful new target that I want to walk you through. They talked in their paper about how, the actual low occurred November 9th, 2022, amid the FTX fiasco, a month and a bit early than expectations from history where normally the bottoms are. Also, Pantera expect a big rally into early 2024. That's not very far away, ladies and gentlemen. We're nearly in September right now. And a very strong rally after the halving. And the following chart shows what might happen if Bitcoin repeats the performance around previous halvings. So currently, they believe the Bitcoin price, even at 26K right now as we speak, their projection is about 35,500 at the halving date. Mine's about 40 to 42. So we're different there. But they believe that Bitcoin, even at this 26K price, is 7% above where it should be during this cycle. But what's really important is where they believe it could go based on future projections. And that right there is a 4.2x up to $147,843. And halving date they expect to be 20th of April. I believe it to be the 17th of April, so we're off by about 3 days there. But remember, it's all happening and it's all coming close. So why does this matter? And is it hopium or is it believable? Well, let's go into the price impact This is kind of how they see it shake up. The beginning price at the halving is 35,448. And then after that, it's going to go up that 4.2x. Did I say? Let me check. 4.2x, yes. Which takes us to the 147,843. And there's some history there of previous impacts and halving. But I thought this was uncanny because I was asked a question way back 3 months ago what my expectation was for this bull run. And we came up with a bunch of data, but we'll get to that in a second. Let's dig more into the TLDR from Pantera and some of the things that they said is very different this time, which I really agree with, and I love what they're saying. Basically, Bitcoin did experience its longest period of negative year-over-year returns, spanning 15 months from the 2nd of August 2022 to the 6th of December 2023. And the previous longest negative period lasted less than a year. It was like about 350 something days, if I recall. Now, they also spoke about positive events like the XRP ruling. That's not reflected in the XRP price right now. It's back to where it was before. But anyway, that's XRP. But they also talked about the big endorsement by BlackRock. And they suggest that this is an extremely favorable setup for the next bull run in digital assets. And of course, Bitcoin this is also confluent with the Bitcoin halving in April 2024. And all the usual stuff, yada, yada. We covered that before. But that is so interesting. And it's nice to hear a firm like Pantera talk about that too. Also, they did say this, that is, subsequent halvings have diminishing impacts on price as supply reductions decrease in relation to previous halvings. As I say, as it becomes a bigger asset class, more people adopting it, there will be diminishing drawdowns and diminishing returns over time. And I have said for years, the impact of the halving gets halved every single cycle, so it becomes less and less significant. But also, having the supply is a massive shock to the system, as you've probably seen in my Bitcoin mining videos, most recently on Sunday, about the shock that is coming for the Bitcoin miners. Now, 3 months ago, I did come up with a target, and there might have been, this was the actual video itself, and the numbers. And the good thing is, we'll add the video link to the description. Whatever I say, it's always out there. You know, you can always go back and check it. So here, these were some of the numbers I used. I was asked a question, how high could we go? And I based my calculations on history, okay, and the days to high. So a couple of important things you'll see here. These are screenshots from the actual video. My target date for the all-time high, based on history, if history repeats, is September 19th, 2025. That's kind of close to Pantera's goal. But what's really interesting is my target is 157,279, which is about 8,000 more than theirs. So, but the problem is, this was all a theoretical target if history repeats. Now, there's two ways that this can roll. One, okay, this is the exciting one, it might be different this time, i.e., there is so little supply, and I'll show you some charts in a second that'll just shake you to the ground. But there's so much excess demand coming, you know, since 2016, 2017, people have been talking about the institutions coming to Bitcoin. Well, they're coming, and they're coming with the biggest gun in the world when it comes to assets under management, and that's BlackRock. So this will be big. This will be exciting. So let's talk about a couple of other things right now, kind of bring it back to where we are now and why people are so freaked out and why I'm as calm as a cucumber. Well, basically, if we look here, this is from Swissblock, and you can see holding this 25K level is key over the coming days. Losing it would likely mean another test of 24,800. Oh no, we'll fall $1,000. Who cares? It's a psychological level. But what's really important is it's been holding up for quite some time. Notice how liquidity diminishes below 26K until high 24Ks. That's when people step in and they buy more. So this level doesn't last very long. And the first step is to hold over that 26,300 level, retest the 26,700 level, and hope that the bulls will drive the price up over 27K. An upward trending spot would be very important at this stage. The problem is, everybody's on vacation. Nobody's focused on this right now, but they're coming back soon. And this August so far hasn't been that catastrophic. It's been weak and bad, but some certain assets are holding up quite nicely as well. Now let's talk about another view of the world in resistance, which is now flipping to support. That's what happens in the past. You know, following the nasty price action last week, Bitcoin has moved sideways this week. It's just ping-ponging around 26K every hour of every day for 8 days now. It is uncanny, and it's kind of what it did up around the 30K, 29K level for a while. But this week's price structure undoubtedly looks very scary with one of your typical bear flag patterns forming. That said, though, remember, price has so far been able to hold that key support level of 25,300, and this level is the convergence of the Feb high, the June low, and the volume weighted anchored average price from the year-to-date open. So you can see very clearly that this is a strong level of support. Okay, but there's more. This is a great chart from our friends at Blockware Solutions as their HODL waves. And forget the colors and the lines and all that beauty behind this. But the most important thing is the quantity of dormant and aged Bitcoin supply is steadily increasing, particularly the 2 to 3 year HODL wave. Okay, this is basically people who bought maybe at the top or held Bitcoin from the very top all the way down to 15,500 and back up again. Now, if you think for a second after what these folks have been through that they're going to sell on this little $4,000 dip from 30K to 26K, no, they are not going to sell this dip. They withstood the journey from 69 to 15.5, and this will not perturb the holders. Also, everything else, when you look at the total number of these long-term holders and the breakout, so purple is 10 years or more, which includes like the Satoshi stash, etc. Yellow is 7 to 10 years. The green is 5 to 7 years, which had a big growth spurt over the last year or so. Then you have the 3 year to 5 year, that kind of greeny seaweed, call it seafoam color. And then your 2 year, 3 year level red, real growth there. These are the people that we're focusing on. They did not sell during the nasty times, and they are not selling now. Then you've got your 1 to 2 year holders as well. Very, very long term. Everybody here is over a year old, and that's 70% of the Bitcoin supply. And that is staggering. Okay? Staggering. So, in addition, this is kind of like the slap across the face, am I dreaming type of thing. So JP Morgan Chase & Company suggests that the recent crypto market sell-off, not just Bitcoin, but crypto, is nearing its conclusion, with the impact of the long position liquidations subsiding completely. Now, the decline in crypto markets was prompted by the fading effect of positive legal and regulatory news, i.e. people expecting a Bitcoin ETF approval, people expecting the Grayscale team to win against the SEC, all that type of stuff. And this caused selling waves, as long as also what I believe whales did a big dump as well, took out a bunch of levered individuals, wiped them out, and so leverage has left the room. And here we are. The trend is showing extreme signs of stabilizing. Now, some of that stuff is not from JP Morgan. That's me ad-libbing, so ignore the middle piece. But the decrease in that open interest in CME Bitcoin futures indicates a weakening of the price trend, and therefore analysts expect limited downside for crypto markets in the near term, with Bitcoin currently trading around that $26,000 on the nose after a 12% fall in the last 2 weeks. So, JP Morgan, who spent the last decade, rapping on Bitcoin and saying there's no downside for Bitcoin. So that's kind of stunning, especially as we go into September, which is historically the worst month, not only for markets, but also for Bitcoin. So that was fun. So let's talk about some other news happening out on now that we've got the Bitcoin halving stuff out of the way. So hope everybody feels good. Let me know if you do. But when all the players come and they start saying things bullish like this, it's a big deal. Now, Bitstamp did decide to end their Ethereum staking in the US, and they're going to do that in September. And this will affect anybody who uses Bitstamp to stake their ETH. And the decision comes in the aftermath of actions by the US SEC and scrutinized platforms offering staking services. So Bitstamp just want to keep their nose clean and just shut it down. Not a big deal. Not the only player to do that as well. Just thought I'd share in case you do have anything there. Now, I will be doing a dedicated video tomorrow on Tesla, but FSD12, the most important thing here is we saw all the hype and hoopla around NVIDIA and their 70% margins. The point I want to make is all year long, Elon Musk has made continuous hints, again, that they are going to achieve FSD by this year's end. And Tesla, if that does happen, it will be a defining moment for the company. It will be their, whatever you call it, ChatGPT moment, or NVIDIA transformative breakthrough for AI. This would mean, imagine profit margins linked to FSD software licensing that are potentially approaching a staggering 100%. They just turn on the feature in the car and customers pay for it. This would pale in comparison to 70% margins that NVIDIA has. And this could truly be the revolutionary game changer. Now, FSD 12, he hinted tonight he might do a demo of it. And he's been hinting all year. It's in alpha still. It's not available to us beta users. We're still on the 11.x version. But again, this is what we're waiting for. This is going to happen. We just don't know when. And that's the exciting thing. So again, what I urge people, just like the Bitcoin halving and with Tesla and FSD, be patient. This is the time to kind of stack as much as you can as we go there. Now, switching gears, there was a surprise, and people say, why didn't you talk about meme coins and all this stuff? Well, I think they're all scams, and I think 95 to 98% of crypto is all a scam. I use data to prove it, and I make myself very unpopular as such, but all I care about is the community, the people on Patreon, and the people here watching this video right now. But yesterday, $16 million worth of Pepe, where coins are transferred from the developer's Mths Ago wallet to different crypto exchanges. I made a video the other day, I can't remember what it was, and I showed how when things move on to exchange, I think it was ApeCoin, a ton of ApeCoin moving on to exchange. That is not something you want to see. If you see a lot of tokens hitting an exchange, get out quickly. So this is the Pepe Mths Ago wallet, and they changed the number of signatures needed from 5 of 8 to 2 of 8. So only 2 people need to sign to be able to ditch all this stuff after so much is sent to exchanges. So again, if you're playing with these meme things, be careful out there. In addition, there's a little bit of regulatory stuff regarding taxes. The US Treasury Department has introduced updated tax rules to simplify the crypto landscape. And these rules will require crypto businesses like miners, etc., to engage with the IRS in a manner similar to traditional stock and mutual fund brokers, but only starting in 2026. And platforms will need to file annual reports on a Form 1099, disclosing gross transaction proceeds. It's nice to have that clarity for platforms, including NFT platforms, DeFi platforms, etc. And again, it's just good to have that. So that's coming in the future. I'm not sure if it's actually law yet, but all goodness too. The more clarity we have, the more money will flow into the space, and the more the price will go up. So it's all excellent. Now, I did have a bit of a Twitter rant on JP's speech this morning. It's just, maybe I'm just sick and tired of listening to him, but he read everything. Okay, first of all, like he's reading a children's storybook, and I read to us like we were 5, stating all the obvious facts that we know. And he keeps on talking about that 2% target, 2% target, 2% target, 2% inflation target. Did I mention the 2% inflation target? We will proceed carefully. Our job is not done. Lowering inflation is our key job requirement or whatever. And the good news is, though, after that speech, there was a zero chance pretty much of a hike in September. But then it was 50% chance of a hike in November. That's fallen to about 35, 38% right now. So it looks like we could be in store for a big pause. And hopefully by then, they'll be able to see true data that really matters. So here I am. This is the real TruFlation from the friends at TruFlation that use Chainlink to gather a whole bunch of data points to make this. You can see actually we did hit 2% a couple of times in July and August. But this is such a cool model. It actually reacts very sensitively to everything that you need to look at. But currently it's at 2.56%. The US government thinks it's at 3.2%. And, well, that's the history. But the question is, they're so close to the 2% target, if they look at this. But at the same time, their 2% target takes into account data that takes so long to trickle through the system, like owner's equivalent rent and stuff. And then the 2% target makes me so mad because this is a team called Shadowstats. They've been studying true inflation for 45 years. Nobody knows American CPI better than these folks. A link is down below if you want to check it out for yourself. shadowstats.com. But here, if you take the average of all those CPIs that are reported back from 1980 to today, you average about 9.8%, okay? The red is what the government thinks the CPI is at. The government wants to pretend inflation is low, but actually have it be high so they don't have to pay back as much debt. They can shrink it themselves. That's why I always urged everybody in 2021, lock in 10-year sub 3% mortgages, interest only, lock them in as much as you can, okay? Because in 10 years, you'll be paying back half of what you borrowed. That's the secret of this. That's what the government want to do. We want to do the same thing, but kind of for our own books. Anyway, sorry for that little rant. And final piece of news today, the dollar index, which is tied to everything else, does seem close to overbought here. You're looking at a couple of things. I want you to cast your eyes on the red line at the top. That is the 200-day moving average. And at the bottom, you have a thing called mean reversion. The mean reversion level is at a 3-month high. And typically, we go down from here. So the dollar index is close to overbought. But remember, the dollar index is also comparing a dirty shirt to a bunch of other dirty shirts. The question is, what is least dirty shirt? And the answer is probably the dollar. But money printers are coming, and that is for sure. So big thank you to everyone on Patreon. See you all tomorrow morning. Thank you all for being here. Travel safe, Mr. Hammer out there. And 2,000 people watching on a Friday. Love it. Thank you, everybody. Smash the like on the way out. Need to get this information to everybody. Have a great Friday. Have a great weekend. Be safe out there. See you soon.